Good weekend, all. Ira Epstein with your financial market wrap-up, and this is your weekend edition for the weekend of Saturday, December 10th, 2022. So, took some time, did my Christmas, some more Christmas shopping, things like that, going out. Now my wife and I start settling in for the holidays, which is always good. We'll see what goes on. Now let's talk about a game plan that I think you have to have in the back of your mind for the next 3 trading days. Monday's one of these days, there's just not a lot of important news. You get a very piece of important news on Tuesday when we get the CPI data. Now, looking back at this week, I was not impressed with the unemployment claims. They're not galloping ahead the way the Fed wants, and the PPI number at best wobbled, not breaking. If CPI wobbles, I'm going to stay with my argument, which I know is not popular because when I read over the weekend, vast amount of analysts, Bloomberg, Reuters surveys, they're all 50 basis points in December. Since I'm not betting on it anyways, I might as well say what I think. And the bet that I would not, I'm not betting on the Fed futures to go one way or the other. That's the point I'm making. I happen to think if you wobble on CPI and don't get the headline number to fall a lot, a problem. I know that the Fed watches the core CPI, but I don't want to focus on that just here. Because of what energy has done and fallen so much, CPI, the headline number, should come out a lot weaker. If it doesn't, it means that the other parts are just so sticky. Why should the Fed then go for the 50 basis points? If, and I think this is why the vast majority of analysts are saying 50 basis points, I think they think the CPI is going to show that number, the headline number, coming down. I think they've given up that the core CPI has to fall a lot with it. It doesn't use food and energy, so those two elements will be out of the market for the time being, and I think that's important. So I understand their argument. But that doesn't change the fact that there's a lot of risk trading into that CPI number that'll come out Tuesday morning. And then for Wednesday afternoon, from that number, you'll be able to have a pretty darn good idea. You'll read the press articles and all for what the Fed's going to do on Wednesday, because it's a live event. They're watching the data. We're going to get the dot plots. There's so much to digest. I'm telling you, don't trade heavy Monday, Tuesday, or Wednesday. That's my point. Been around this a long time. Dangerous. Move into the grain markets. Move into other markets. Don't be in the line of this market, of the currency markets and the interest rates. The metals will get the backlash of what the currencies do. So when I look at the S&P, this whole time, for a good part of this year, you've stayed under the 18-month moving average of closes. So the bias has been down, and that's how the year has worked out. You have flip-flopped all over the place since the beginning of the year at the 18-week average, and now you're over it. Now, if you break down from here and close under 39.15, you could be right back under that number. That's not very far. It's 20 points away, so not too far from that. On the charts, we had a big break, another rally, and you've sort of gone into the center of that. I think you can almost visually see it, that you're just sitting here and the big money is poised and saying, I think what I'm doing there. They realize, let's get through this before we do too much with it. Do we have a trend? We don't. You have a higher high, and with the break on Friday, you have a lower low. That break carried the market down low enough to break through those lows. You're battling now at the 18-week average of closes, void of a trend. The bias is up, trendless. The market did not hit the Bollinger Band on the upside or the 100-week average. What it's really done is from when you got back here in September and October, this time frame, and hit the 200-week average and the Bollinger Band, the market came back up at that point and did what? It held it, came back, and you've just sort of gone a rally, a short covering rally, and sideways. That's what I think is going on more or less. Momentum is starting to buckle a little, but I can't say it's turned down. This is a big nothing chart. When I come to the Dow Jones Industrials, I have a market that has got both numbers over the 80 level. You can see that. The week before that, let's see if I can get this to move with us one way or the other. Yeah, I can. So this is the week of December 2nd. Both numbers were not over 80. So with that, that means you've just gotten to the first week where you're trying to get an embedded reading. Got to get 2 more weeks to get it done. You're at an extreme. You're void of a trend if you consider that you're not making the pattern of higher highs, higher lows. You have a lower low, higher high pattern. The resistance point was here. Remember, you got over it just a slight while, then you went back under it, came here, came under. And suddenly, it's been acting in a longer duration as support. Is that going to be enough to kick you up to the Bollinger Band and create a trend or not? To do that, this week's high has to be taken out. Barring that, if it's not, the odds favor you will come down under that and maybe even open the door to get back to the 18-week average of closes. Do I have an idea? None. So if you were to ask me, I would throw a dart. It's as good as a guess as to right here. In the NASDAQ, we nailed this because I said, keep your eye on the 200-week and the 18-week. And you've been fighting and narrowing in the fighting all the way through that. Nailed it. So now, get back over 12,118.75. You got to join the bull camp looking to get up here. Get underneath and stay under the 200-week now, and you could open the door to come back there. Why gamble on it? It's too difficult. In the Russell, you could not make it on this run to any of the resistance points here. You had your bear market rally. It got into the 18-day average. Now it's fallen back to the 200 and the 18, and you had an outside week up last week. You should not have taken that out. When you do, it means that you're probably going to the closest moving average under the market, which happens to be, it was right there. You came down to the 200 weeks. So you've hit your objectives, but the market's sputtering. That's the word that I want to use with it. In the 30-year bond, it's been a beautiful rally. The market is baked into the mentality that we're going to have a recession in the first part of 2023. The recession will be shallow. There's no need for the back-end rates to be over 4%. I don't know that that's right or wrong. That's the thinking today. We will see how the thinking goes as we get into the next series of numbers, but understand the thinking. The trend is up. Where would you put a stop if you bought this market? That's the problem. You're going all the way back here. You know how much you'd be risking in that trade? I can tell you right now, $10,000. No. I think it's time to observe, and that's it. Same in the 10-year. If you bought it up here, you put a stop all the way back at 109, about a $4,000 risk. I don't see that. In the dollar index, we continue to break, but I see good support coming in the 103.38 level. If you were to come back up here and take out this 103.90 level, that could be the problem for the market, okay? But you're not there at this point. We have to wait and see. Did I say 103.90? I'm obviously reading that wrong. 107, I believe it is 90. Let's find out. 107.90. I had it right. 107.90. That's what you'd have to take to negate the current downtrend. The downtrend, though, is not embedded, so it didn't lock itself in. In the euro, this is a spot to come out. I've said that. You don't buy upper Bollinger Bands when you're not embedded. It's that simple. That's what I believe. The Canadian dollar, until this week's high is taken out, has thrown out new sell signals. It's opening the door for a potential retest of 71.28 if it doesn't take out this week's highs, at least on the current chart pattern. The yen has defied all the experts that didn't understand. You lose an embedded reading, and what does it tell you? That you should be going back to the 18-week average. Well, that ended the downtrend, and this has been the remnants of people covering shorts that hung on too long. That's what I really think has happened there. And in Bitcoin, I think the way to approach these is you no longer want to be short in the near term. I think you want to be sidelined now. So the pressure that I saw in this market and other markets should come off. We do see that SBF, as he's called, will be in front of Congress on Tuesday. I hope they drill him a new you-know-what. Starts with an A, ends with an E. because all he's going to say is, if it's the same thing, I wasn't paying attention. You'll think about it, 10 years in jail. You'll pay attention next time. They're looking for fraud. They're looking for money laundering. They're looking for everything. When you get the whole government looking, they find things. It's that they can invent things. An innocent guy can be in trouble. You know that. Come on. Well, $9 billion disappears it's the biggest loss of money I've ever seen that fast. I mean, just instant in a new industry. And this was supposed to be the guardian of it, right? I'm not making this stuff up. How many in Congress are going to drill him that he gave money to? That's the thing that we all have to watch. The press will be on that story big time Tuesday. So you got your hands full. You have to be careful what you're going to do here. You have to pay attention to the Bollinger Bands. Learn them right now. Take advantage. Make yourself your New Year's promise. I am going to learn what Ira's saying on the Bollinger Bands. Recognize it's when I'm looking at a chart, I'm not getting overly bullish where the market is saying, don't do that anymore. And once it locks in, I'm not scared to be a buyer on the breaks if it's a bullish embedded or seller on the rallies if it's bearish, and I know the rules. How do you learn those rules? Take a look at this. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.